The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. I hope everybody had a great Thanksgiving holiday. And we're going to go ahead and check out the markets and where they're at right now. Been a little choppy this morning, so I had a big gap down there on the open. Started to pull up, pulled back, and looks like it's trying to maybe think about filling that gap in before the day is over. We'll see. We got the S&P down 5 points right now. We got the NASDAQ up 5. We have the Dow down 50. And we have the Russell down 2.3. And looking on over at gold. Gold is down just 90 cents on the day right now. And copper is basically flat as well, just down a point or up 0.2%. We got silver. Looking at that, literally just down 0.03%. So, I mean, it's flat on the day compared to the last day's close there. We got corn up 3.25, soybeans up 5.25, and oil is down 43 cents, dropping a little bit on possible peace talks coming out of the Middle East. And then looking over at natural gas, it is down 4%. So it is the big mover and shaker of the day. Natural gas just taking a dive, getting down 4% on the day right now. We got euro dollar pretty flat, down 12 pips, pound dollar down 16, Aussie dollar down 6, and US yen down just a mere 30 pips in the US franc, down 2, with the US Canadian up 18 on the day. And with bond yields rising a little bit right now, so it's sort of ticking up over there. We'll see how that comes on out, but it looks like people aren't completely optimistic, but not completely pessimistic after that holiday weekend. And we don't have the full volume yet. We'll be seeing that a little bit later. And let's go ahead and check out a few things. One of the things you want to be aware of is the seasonal cycles. So the market does trend. And one of the things we talk about, market does trend seasonally right during this week. And one of the things we talk right here, we're on the Diagnostic Trading Hour. Diagnostic Trading is looking at how fundamental traders, seasonal traders, technical traders, and statistical traders look at the market, so you can be one step ahead of the market by knowing where they will place their orders. So checking those things out, what can we correlate? Well, we know that today, or basically Tuesday, Wednesday, and Thursday are usually bullish days historically. Friday is going to be, I think that's going to be the last trading day of the month. And a majority of the time, 70% of the time, the last trading day of November is a bearish day. So, it's sort of an interesting stat with the, how the whole payroll cycle works. But usually it is a bearish day. So just be aware of that seasonal cycle. Does that mean you're short just because seasonally it's a bearish day? No, it doesn't. But it lets you know that seasonally that the markets do short on the last trading day of November. So being aware of that, now you also have a different seasonal cycle coming into play. You have the payroll cycle. So on the 1st and 15th of the month, most people get paid, and from large corporations, that money then goes into their 401ks on autopilot, regardless of what's going on in the market. That money then goes into mutual funds, which then in turn goes into stocks. So you have both of those things battling it out on the last trading day this year. Sometimes that last trading day in November is not on a Friday, but no matter what, it is always at the end of the month. So you're going to have two of those battling out, but usually the bears do win on the last trading day of November. So just keep that in the back of your mind as you're checking things out. And, like I said, you don't go short just because of that. Make sure you look at all things in diagnostic trading, fundamentals, seasonals, technicals, and statistics. So put them all together so that way you can have an idea of where you want to place your orders, what direction you want to go, and maybe, what might be flowing in your favor. And with that in mind, let's go ahead. That's our quick seasonal wrap for the day. Let's check out what's been going on in the world with news. Well, as I'm sure you know, that they had the peace talks got announced last week, and they got a little bit of a ceasefire, and maybe they're going to do some construction, all that. And so that's obviously a very good thing. That's driving oil down as well. So that's a big impact on your oil trades if you're an oil trader. And then some crazy things also going on over in Egypt with their president basically taking over and putting himself above the court. Sometimes might sound a little bit familiar, but not harping too much on that one. But their market dropped 10%. They had a 10% gap on the open, just dropped right down. And that, of course, pulled everything down across the board when it opened up. And so that's been sort of the challenge the markets have been facing this morning, even on filling that gap, is basically overcoming that big decline that happened due to that. And again, Egypt obviously not being one of the largest exchanges, but nevertheless, it is a global impact fundamental event. Eurogroup meetings are going on all day right now. It is highly anticipated that they will figure out a way to actually do some sort of Spanish bailout. That keeps coming up. But at the end of the day, Greece is still the number one topic, and they need a decision on whether or not they're going to get a loan. And the Greek Prime Minister actually came out today and he said, we need a decision today. So it's becoming a big issue and could be the one of the big issues. That what other issue we got? Well, obviously right here fundamentally, we had the major issue at home of tax increases. You're talking dividends for the low-income earners going up to 45%, okay? So from 15%. So that's your retirement people are living on that money. That's not just the rich, that's everybody. And so obviously they got to be working out these tax issues. We had the fiscal cliff, and which is amazing that, I don't know, I find it sort of amazing that $100 billion is a fiscal cliff, considering we are consistently borrowing $100 billion over our revenue every single month. $1 trillion a year basically that we're borrowing right now. So it's like 10% of the revenue we're borrowing, going in deficit on, and that we're cutting out of the budget, and all of a sudden that's going to kill the economy. Like, obviously the economy is a lot worse off than it's an amazing thing that 10% of the debt that we're adding on is the fiscal cliff. So it'll be interesting to see if they work that out or not. And right now you got some Republicans starting to say, well, you know what, if we close loopholes, we could work something out on getting, past this fiscal cliff. You got some Democrats saying, well, we might be willing to do that. You even have Obama saying he might be willing to negotiate. The closer it gets, the more each side is saying that they may be willing to go in and work on it. But who knows, man? At the end of the day, we're going to find out. And no matter what, we can guarantee one thing: they'll be blaming it on each other. But in the middle of that is everybody else's jobs, paychecks, and livelihoods in the balance. So one of the nice things about being a trader, though, is whether the markets go up, whether they go down, or whether they're flat, you can trade them either way. And so sometimes down is better because it's faster. And, some people, get all negative on the downside. Well, you don't complain when the price of oil goes down and the price of gasoline goes down. So down isn't always a bad thing. But anyway, so, just keep that in mind. That's one of the nice things, even on all the doom and gloom. You know what? Markets are moving, and take advantage of it. That's why you are a trader. Now, let's go ahead and check out some of the things that came out last week, do a little wrap up. So I haven't talked to you there since the middle of last week, and so we'll go in here and pull it up and get caught up on what's been going on. And we had unemployment claims in the U.S. came in last week, a little better than expected, not much better on Wednesday. Then on Thursday, we had the French manufacturing PMI and German manufacturing PMI. Those both came in better than expected. On Thanksgiving, the EU Economic Summit got launched out day one. And then Spanish 10-year bond auction, bonds actually did tick up a little bit, up to 5.52 from the previous number at 5.46. So showing some concerns over there. Obviously, we had the U.S., having a bank holiday on Thursday and, white trading Wednesday, Thursday, and especially on Friday. And that white trading can cause big moves. And we did see that historical seasonal cycle. I talked about that last Tuesday, I believe. Talked about how usually the market does go up on the Wednesday and Friday surrounding Thanksgiving. And we saw that seasonal cycle especially ring true on Friday as the market did go ahead and shoot through the roof. Now, looking on over at what else we got. On Friday, Draghi came out. He made a little speech. And then there's a couple other reports that came out. The EU Economic Summit continued to move on. And this week, I think we'll have the Climate Change Summit's going to be going on as well, or starting up sometime this week. And looking at right now, like I said, we have the Eurogroup meetings taken off. And going over and looking at a couple more things. That's pretty much it for the day. So a very quiet day, all in all. Switzerland had their employment level come out. It came in a little better than expected. So that was good for the franc itself. And then going into this week, what do we got on the roster? Well, obviously, the fiscal cliff is going to be right up there. Spain's going to be an issue, and Greece is going to be an issue. So we got those three big things. But what about these scheduled releases? Well, we got the revised GDP quarter over quarter is coming out. So they had the October number come out, then they had the November come out, and then they had the December number come out. So this is the second number that comes out. They're expecting right now it to come in at 1%. And that is the expectation. That's the revised expectation. However, it came in at basically negative 0.5%, negative 0.3%, negative 0.2%. The last several months on that revised number. So we'll see if that trend continues or if it continues to decline and not meet expectations. looking on over, and if you don't know what the GDP is, that's basically your number one economic indicator, letting you know what the health of the overall economy is. And if GDP doesn't grow, neither does employment. So unemployment grows if GDP shrinks. And you need that money supply moving. And right now we don't have any QE going into money supply. We have QE going into the mortgage-backed securities, which at best goes into the markets, but it does not go into the money supply. So in no way is it impacting GDP or unemployment. Now, if we move on down a little bit further, we're going to have core durable good orders. That's going to happen tomorrow morning at 8:30 a.m. And that'll be right here. And again, that's pretty big, obviously, number going on, especially in the middle of everything that's going on as far as the economy. And it's a leading indicator of production. So more orders being placed means that manufacturers are increasing activity to fill those orders. So the market is really going to be focusing on that to see, are manufacturers looking at ramping things up, or are they pulling them down? Last time they thought it'd come in at 0.8, and it came in at 2%. So it was a really good number. Right now they're actually expecting a decline. They're expecting negative 0.6%. So we'll see if it it's better or worse than those expectations. But that will definitely be a market mover at 8:30 a.m. Eastern time tomorrow. And then a little bit later at 10 a.m. we're going to have the CB Consumer Confidence Report, and that's the Conference Board Inc. What they do is they go out and they survey 5,000 households about basically what they think about the future economic conditions, labor, ability to find a job, business conditions, and overall economic situations. So those are going to be your big numbers you're going to be focusing on tomorrow. And as we scroll on into Wednesday, we check that out. We're going to have new home sales right here in the U.S. is going to be our big number. That's going to come out on 10 a.m. That's going to be a big focus. So again, that's new home sales. And so that's going to be, huge to see, hey, is the market really, is it continuing to come back, or is it starting to, shrink? So that's one of the big leading indicators in the economy. Also, out of Switzerland, we're going to be having the Switzerland National Bank chairman. He's going to be speaking at 12:15 p.m. on Wednesday. So he's going to be having a little speech called Monetary Policy and Investment Policy of the National Bank and the Sign of the Strength of the franc. So that obviously could easily have an impact on the U.S. franc, and you could be trading that again on Wednesday at 12:15 Eastern Time. And then New Zealand dollar traders going to have a chance to have a little report. The New Zealand dollar didn't have a whole lot of announcements coming out, but it does have one coming out on Wednesday at 7 p.m., and that's going to be the New Zealand Business Consumer Confidence Report. The issue with that report, the hard thing about trading it, is you don't really have a forecasted number, okay? So you just literally going to go in, and if it's good, then dollar, New Zealand dollar gets stronger. If it's not, it gets weaker. And it's really one of those trades that's very difficult to trade before the announcement because there is no forecast. Looking on over the Aussie, Wednesday night, going to have private capital expenditure, and that's basically the change in the inflation-adjusted value of capital being spent by private businesses. So that's your Aussie dollar trade on Wednesday night at 7:30 Eastern Time. And we'll scroll in. We'll check out Thursday and Friday. And then let's start checking out the markets and seeing what they're doing. We'll come back a little more detail right after we get back from this break. Stay right there.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're going through and just wrapping up what's coming up this week. And we got Monday, Tuesday, and Wednesday out of the way. Checking out Thursday. On Thursday, your big reports, the Italian bond auction is going to be coming out sometime on Thursday. The time has not been announced, but any time Thursday morning, early morning to mid-morning, we're going to have that number come out. That's going to be a big impact event, of course, because Italy, people are basically afraid that they would become the next Spain. And at 5:30, we're going to have the Bank of England governor. Governor King is going to be coming out and talking, and that'll come out at 5:30. He'll be doing a press conference about the financial stability report that Britain puts out. And they'll, of course, be putting that out at 5:30. So the report will get released, and then he'll be doing a press conference on that. That should cause some nice volatility right there in the pound dollar for you. So if you're a pound dollar trader, 5:30 a.m. bright and early Eastern time on Thursday morning will be the time you should expect some movement. And if you are in a trade and you're up, that's the time you probably want to be looking at tightening some stops. Looking on over at our preliminary GDP, we're going to have that coming out. Like I said, we do have the GDP coming out. The revised GDP quarter over comes out on Tuesday. But on Thursday, we're going to have the preliminary GDP coming out. And that's the annualized change in the value of all the goods sold. And it's the broadest measure. So, again, there's 3 versions of the GDP released. And they're all released basically a month apart. You have the advanced, the preliminary, and the final. So this is the preliminary report. And, again, the one on Tuesday is going to be the revised. So that's the last, okay? So that's your final report. But we'll have the preliminary GDP quarter over quarter. You want to be paying attention to that. That's going to be probably one of the biggest announcements we'll have all week long. That's Thursday. 8:30, and they're going to be looking to see what that's coming in at. They're actually projecting it to be at 2.8%, and we have not been that high since February of this year. So if it doesn't meet those expectations, that's going to have a dramatic down move on the market. If it does meet them or exceeds them, then that could have a big up move on the market. And again, seasonally, we do expect Thursday to be a very bullish day. And looking over unemployment claims, the expectation is 404,000. We'll see how they come in. That number is a little bit, basically, it's one of the lower numbers that's been reported. They expected 415 last week. 410 came in. They're expecting 404 this week. And they've been revising a lot of the numbers upwards as well. So one thing you always want to remember on the numbers when they come out is you want to look at what is the expectation, what is the number, how did that compare to the last number that was reported, did they revise any of the previous numbers, and how did that compare to this same time last quarter, the same time last year. So looking at all those is actually what impacts, because sometimes you go in and you're like, that number was bad, why didn't the market go down? Well, it's because they revised all this other information that actually made it a positive thing. And then, like I said, we have new home sales starting up, but we'll have pending home sales later in the week, Thursday at 10 a.m. Central Time. And they're expected to come in at 0.9%, and that would be one of the highest numbers we've had in the last few months. We had basically 0.3%. Last month we had negative 2.6% in September. So 0.9 would be a pretty big up move. That is the expectation. They actually thought it would be 2.3 last month. It came in at 0.3. So now they revised that number down a little bit. Now they expect 0.9. So we'll see what the actual result is. But again, that's going to be our market mover on Thursday morning at 10 a.m. And then, of course, you'll have your natural gas storage on Thursday, and you'll have your oil inventories coming out on Wednesday. And then looking on a little bit further into Friday, we're going to have the Canadian GDP coming out at 8:30 Friday morning. And so that, of course, will affect the U.S. Canadian dollar. Also could affect just the U.S. markets as a whole because they're obviously a big trade partner. But again, that's your U.S. Canadian trade, 8:30 a.m. Eastern Time on Friday morning. And then China will also have manufacturing PMI coming out late Friday night. Obviously, will not impact the markets since they will be closed, but it can spill on over into Friday. And depending on how bad that number is, I mean, they like to release these numbers in China on Friday, so if they're bad, market tries to forget about it a little bit because it has a couple days to process it and move on to the next number, the next report. And that basically wraps up the numbers that we're looking at for the week, the times you want to have those fundamentals in place. And again, one of the things I say over and over again is know when those fundamental announcements come out. I don't care if you're a futures trader or a Forex trader or a stock trader or an options trader. You got to know when these timed announcements, I mean, it's an advantage, right? You know when they're coming out, okay? That's a big advantage. So it doesn't matter what your system says. Doesn't matter what your seasonals say, okay? When a fundamental report's going to come out, it can change everything. And I'm not saying forever, but for about 15 minutes, it can have a massive impact. And so you can have a good trade that becomes a bad trade, or you can have a bad trade that becomes a really bad trade. Or it may go in your favor. But it's one of those things you definitely want to be aware of when they're coming out because, one of the examples I like to use is if you go to the doctor, you get a clean bill of health, and he says, hey, your heart's great, pulse is great, everything's great. You walk out, you don't look both ways before you cross the street, then, a bus hits you. And that's the fundamental report coming out. So just be aware of when those are. Even if you're a stock trader, you're not used to looking at them, you need to be aware of them because they will impact stocks. And even the ones that happened overnight, okay? What about the ones that happened overnight? Those are important. They're not going to have an immediate impact, but they are going to affect the sentiment of that day if there's a lot of bad news last night. So that way you're not just focused on a stock, but you're looking at the overall picture as well. There, folks. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour with Darrell Martin. If you have any questions, make sure to give me a call. You can reach me right now at 877-927-6648. Again, that's 877-927-6648. And as always, as you know, my favorite way to trade is over on the Nadex exchange. If you haven't opened an account over on the Nadex exchange, you definitely want to do that. Check it out, see how it works. And if you'd like to maximize your leverage, what does that mean? That means have your dollars work harder for you. So instead of putting up $50 to control $100, put up $50 to control, $1,000 or $10,000 or $100,000, literally. So go in and check that out. Now, people, they get a little bit afraid of leverage because they're like, well, leverage, man, that can cut you both ways, right? Well, with Nadex, you can minimize your risk. So you get the maximized leverage in your favor where you can control, gold contracts for $30, $100, whatever. You can, trade S&P, you can trade the DAX, you can trade oil, you can trade a variety of different markets. You can trade currency pairs, so all the major index ETFs over on the following the futures ETFs, so there are future indexes. So all that's available over on the Nadex exchange, but with capped risk. So when you go and you put your trade up, let's say you have $100 risk, that is your margin, which makes your buying power high. Your risk can't be greater than $100, and you cannot be stopped out on the trade. And to check out how this works, two things you want to do. You got two steps. Step one, right now, go to TFNN.com and click on Nadex. As soon as you do that, then click on Create Account. And go to start, and then within 5 minutes you can go from start to funded. You only have to have $100 to fund a live account, okay? $100 deposit. That gets you access to the platform, no commissions. You do have exchange fees, but so you on CME and everything else. But no commissions because you're going direct to the exchange. No live data fees, no chart fees, no platform fees. So everything right there because you're a direct member of the exchange. And again, only $100 to fund a live account. Now you can put $100,000 in or you can put $100 in. But only $100 required to start with a live account and get a demo account under our products. Go to demo account. You can fill this in, and within 15 seconds, you can have full access to the demo platform, which is almost exactly the same. There may be a little bit difference because demo account will pull live information, but if demo traders are placing trades, it'll take that into account as well. And so, but you can put in a username, first name, last name, phone number, and email address to apply for demo. They'll send you a password, and literally within a matter of about 15 seconds, you can log in and get full access to the Nadex platform. Now, once you've done that, you may be like, how does this work? What do I do? How do I trade it? And one of the things, again, I love to do this, so I actually have classes and everything built on this. Just go over to TFNN.com, click on the Diagnostic Box Spread Analyzer right there, and you can sign up and get access to tutorials on binaries, tutorials on spreads. You get access to the live box spread analyzer, which makes the best way to trade, Nadex, because you have maximum leverage and minimum risk, easier to trade. And you also get access to my deviation levels. And the deviation levels basically letting you know what is a one deviation move on any given market with any given day. And it helps you set profit targets. It helps you take profits and trail your stops. Helps you let you know where reversal points are. And it basically is just helpful all around to traders. And I have them on most of the Nadex markets, which means most of the futures markets. So even if you're a futures or forex trader, this can benefit you. And what happens is once you sign up, you'll for 2 weeks, no charge at all, you'll be able to hop in and access this and see how it works, 2-week free trial. But you'll go in, there'll be the tutorials, getting started, who is Nadex, how do spreads work, how do binaries work. You'll get access to the box spread scanner, where you can go in here and say, you know what, I want to trade the S&P 500. I don't want to risk more than $100. I want to buy, and I want at least a 2-to-1 risk-reward ratio. It'll show you the exact spread. So like right here, $28 risk, $31 risk, $31 risk. And then it helps you find the best one. So both of these expire at the end of the day, okay? And so they both expire in 156 minutes or at 4:15 Eastern. So right there. And then they both have 2 points to move to be break even. And the risk on the trades is $30. All right. But the reward on one trade is $266. The reward on this trade is $366 potential. So you're going to have a $100 prop potential if you buy this spread. There is 100% no reason to buy it. So literally just one trade can more than pay for the entire thing for you. You can actually get access to the scanner for less than $100. And again, you also get access to the deviation levels. But again, I walk you through all this step by step on what to do and how to do it. And there's even a little help section right here where we have some things that you can use to help you get started really quick along with the tutorials. And one of the number one things is the deviation levels. And what this is instead of being, I talk about fundamentals. We talked about that today on the show. We talked about seasonals. But I also talk about statistics. And you probably don't want to have to do a whole lot of math and a whole lot of statistics. And me neither. So that's why I had this built. I made it. And then I gave it to a programmer to help me build it and feed it in live. It updates automatically every day. And you've heard of standard deviation. But the problem with standard deviation, the whole bell curve, is it's based on yesterday's price movement, what happened before. It's not based on the expectation of the market today. And so what I do is I go in and actually take the implied volatility, which is the expected move, that's built into the options market for the S&P 500 futures, gold futures, oil futures, euro dollar, on down the list. And I pull that out, and then I tie that into a deviation formula meant for short-term trading, so 1 to 5 days. And what this does, it actually shows you at what level the market is expected to move to at any given time. And so we can go in and we can pull up charts, and you can literally use this to, tighten your stops and everything else. And, some days you have big moves, some days you have little moves. But, what should you expect to actually happen? So let's say we go in here, maximize the grid sell, and we'll check it out. So we got a low right now on the S&P today of 1395. Well, what this said right here is that you want to be tightening your stops if you're short at 1398, then 1396, then 1392. It didn't hit 1392, but you did tighten it at 1396. So over here, when it hit 1395 and then turned around, you were able to lock in your profits. And, Nadex helps you manage your risk, but now you have to manage your profit. And that's what the deviations are about. It's like, okay, if it hits that, I tighten my stop. If it starts going back in the other direction, then I need to get out. And so I get out and I protect my profits as well. Not just protect my initial capital, but protect the capital that I've made since I got in the trade. And we can hop over, some other areas. We got oil. So oil has moved down a little bit today. and we had a low on oil so far of 87.27, and we had an expectation of a move down to 87.43, and where we would have tightened our stops, and of course that definitely happened right here. And then it said, if it does move further, it'll move on down to 87.08. Well, we didn't have that move. We did have the 87.43. We had that right in the morning, and you can see it just went chop right there, and then decided to pull on back. And so it would have been a great point to be tightening your stop, because there really was no reason to be in, and you would have gave all your profits back from this morning if you were short on oil. And you can go in, you can look at areas like, gold. Gold's been really flat, and it said, hey, expect a range, and there's always going to be a range, okay? Even a trending market's going to have a range, an expected move on both sides. And so if we go and we look at, gold, it moved down to a low side of 1746, and the expectation was that it would stay within 1739 to 1763. It has done that. And why is that helpful? Well, there's premium collection strategies you can do on Nadex. So you don't just have to be directional, you can be neutral. And so you can say, hey, I expect it to stay inside this range. And by knowing what the deviation levels are, it lets you know where to, ideally collect your premium from, so that way you minimize your risk and you're one step ahead of the markets by knowing what the expectation is in the market itself. And then we had a big old move, started early this morning on natural gas. It just dropped down. We had a low there at 3.72, and it looks like we just had a low recently, actually, at 3.704. And going on over to the natural gas, that literally blew out every single move possible. But you would have been tightening your stops all the way down to 3.787. And after that, you just tighten it as much as you want to. That's an insane move. You never expect that kind of move. And that came through, and like I said, it just fell off the planet there. But then, of course, we got to roll over pretty soon. We'll be moving over to the next contract month. But just a massive, massive move right there on natural gas. And, we can go in and we can look at some of the other pairs, like let's say euro dollar, which is, everything across the board been pretty flat. We're talking post-holiday day right now. But let's see here. Euro dollar, it did move down early this morning to a low of 1.2943. We had an expectation to tighten the stop at 1.2935. And so right there, literally you got a complete range-bound trade. And so your premium collection strategy could have been in between 1.2935 and up to 1.3005. So basically you're saying, hey, if it stays in this range, then I can make money on the trade. So like I said, there's a lot of different ways to trade on Nadex. And some people get so overwhelmed because there's so many different ways. And that's sort of the options market, right? You have so many options. And if you're an options trader, you're going to love it because you have all these different options you can play with. At the same time, let's say if you're just a standard ETF or futures or forex trader, you don't want all that, option stuff. You just want simple. Well, that's what the spreads are for, okay? It's just like buying or selling the underlying market, except for your risk is capped. You can still make point-for-point move. You just got to put it together. So a 1 point move in the spread equaling a 1 point move in the underlying, like a $50 move, 1 point move on the S&P, it's $50. So if you go over and you look at the US 500, which follows the S&P 500 futures, then you could do 5 of those because 1 point move in the S&P over on Nadex is $10. So if you do 5 of them, it's $50 a point. So 1 point move could still get you $50, but your risk could be, say, $150. So you could have a 3-point stop loss, but still get that massive buying power where, if you put up, say, $150 in risk, okay, you're getting $70,000 in buying power. And that's huge. That's what making money is about, is having massive leverage. At the same time, it's not just what you make, it's what you lose. So you want to have that defined risk. So if you've ever want to get into futures, you've ever want to get into Forex, but leverage has been the number one thing holding you back, or it has seemed too complex with all the weird ticks and everything else and all that stuff, Nadex makes it simple. They make it easy. And they help you define your risk without having to worry about leverage cutting against you, but just working for you. And so I highly recommend you check it out, whether you're a new trader or whether you're an experienced trader. It is definitely, in all the ways that I've traded, all the different markets I've traded, all the different products I've traded out there, it is my favorite way to trade by far. And one of the biggest reasons I'll tell you is a bad day is never a bad day. You can recover from it. Unless you go in and just load up on 1,000 contracts or something. But as far as going in and doing 5 contracts or 10 or 20 or even 50 contracts, you can recover from that pretty easily. You do that over on the futures market, you could end up owing your house, right? So it's really nice to know that you have that peace of mind. Sometimes I'll put trades on it at night because I think there's going to be a big movement based on maybe a bond auction or something. Well, I'm the type of trader I am. I can't leave a highly leveraged futures contract over at night and go to sleep and not be checking my phone every 30 minutes, okay? I won't be able to sleep well. Well, with Nadex, I can go on and I can put that on, I have that defined risk. Market moves is my favorite. I have my take profit order in, and I don't have to worry about a stop loss. I have till the end of the day, and my risk will never increase no matter how far it moves against me. So there's just a lot of advantages to trading on Nadex, and I highly suggest that you check it out. And let's go ahead and look at a couple other things right here that's going on and see sort of where the markets are sitting right now. And I'll pull that up for you. We'll pull the quote board up here. Yeah, we got the S&P still pretty flat, down 5.5. Nasdaq has been the leader of the day based on some reports that have come out. It's up 7 points right now. We got the Dow down 54 and the Russell just down 1.8. They are pushing. They're trying to look like they may want to fill in that gap. We'll see if they're able to do it or not. And next thing we want to do is we want to go in, and I want to show you just a couple things on the Nadex platform. You may have never logged on here. You may have never checked it out. So let me log in and do just a quick tutorial for you to give you just a quick synopsis of how it works. And logging in right now. And like I said, you can get access to a demo account. Just go to TFNN.com, click on the Nadex banner, click on our products, and under that, they have a demo account link. Okay? And you'll be able to sign up right away and give me immediate access. So you can just sort of start playing with it. All right? So let's look at this, and let's look at how literally simple this is. And it's so much more simple than people try to make it. And even I sometimes make it complicated, and it's not that complicated. But let's go over here. Let's check out, say, the S&P 500. Okay? And we're looking at the ones that expire at the end of the day. Okay? So pretty simple. You got that down, right? And then what's going to happen is going to be these three spreads. So if I go in here and I pull up an S&P 500 chart, okay, and I look at these spreads. I got a 1400 up to 1440 and a 1360 up to 1400. So if I go in here, I got to literally shrink this thing a lot because there's a massive amount of profit potential in this spread. And then I'm going to go in here and I'm going to put in a simple rectangle. I like to call them they call them bull spreads, which really doesn't make any sense because they're bullish if you buy them, they're bearish if you sell them. But so I call them box spreads because if you put them on a chart, they're going to look like a box. So right here we go in. I'm going to draw this box. And then I'm going to draw another box down here. And let's see, we need to go all the way down to 1360 over here. And put that one on there. And then what I'll do is, let's see here if I can edit that one. And we'll just change the color of one of them so you can see the difference between one and the other. There we go, put that one on the downside. See if that does it for us. Okay, well that'll work good enough. All right, so now that we have this, and we'll go and we'll zoom in a little bit. So if I buy the 1400 up to 1440 bucks, then that means I can make money up to 1440. I can't make money past it. Well, I don't know about you, but let's just check out the deviation levels here, okay? We don't expect the S&P 500 to move more than 13 points above the previous day's close, okay? So that's 1405 right there. So, we don't expect to move really above 1418 at the most for the day. So I'm not really worried about capping out my profit potential. What I'm worried about is limiting my risk. So if I wanted to go in and I actually wanted to buy this right now, then here's what it would cost me. We'll go in, we're going to click the button on here, do one of them, $19. Let's say I want to do 5. So 1 point move in the spread would equal a 1 point move in the underlying. My total risk on the trade is $95, okay? That's a 2 point, not even a 2 point stop loss on an S&P E-mini future. But I can't get stopped out. So no matter what happens over here, if I go in, the S&P can go down, it can go up. I mean, it can go really anywhere. And let's see here, I'll sort of draw a couple things on this for you. But we can go in and put, let's say the S&P goes down, and then, the S&P goes up, and then goes back down. It doesn't matter. I cannot get stopped out of the trade. My risk is never going to increase past $100 on the trade. My margin is only $100. You're going to put up at least $400 at best at that broker. So really maximizing your leverage. Stay right there, we'll come back, and I'll wrap up this example for you.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. We're wrapping up an example right here on a box spread. And what we're saying is if you went in and you bought the 1400 to 1440 box spread, then you would only have a $100 risk if you did 5 of them, okay? Why would you do 5? Well, because by doing 5, then a 1-point move in the S&P equals $50. If you don't know what that means, don't worry, okay? That's more applicable to a futures trader, okay? So if you did 1, your risk would be $20, all right? But let's just say you go ahead and go with 5. So you have less than $100 risk on the trade. And then as it moves up, you make $50 a point for every point it's above where you bought it at, all the way up to 1440. So you have the ability to make a pretty decent amount of money on here. It's already actually went up $50 since we got in there. It would be break even right now on the trade. But it's up at 1401.9. Would have had a $95 risk and a $1,900 profit potential. Do we expect it to move that far? No. But we do expect it to move as high as, not that I think it's going to happen, but it could move as high as 1418. So the most I should expect out of this trade, Pretty simple, okay? So 1418 minus where I bought it at, 1401.9, 16 points, okay, at $50 a point. So my most expected profit on this trade is $800 on a $100 risk. So that all sounds great, but here's the big thing, okay? Less margin, $100 versus $400 or $500 on an S&P future contract that you're doing. If you have intraday margin, depending upon your broker, it could be several grand, but only $100 with Nadex. The S&P could drop down to $13.95, $13.90, $13.80, whatever, and you'd still only be down $100. Here's the big kicker. Here's the thing that makes the big difference: is you're still in your trade. So as long as it's above that where you bought it at 1401 at expiration, then you make money. And anywhere between 1400, the floor, okay, and we see that right here on the ticket. You can see where it says floor over here in Nadex. You got floor, 1400. So anywhere between the floor and where we bought it at 1401.9, then we'll get some of our money back if it expires in between there. Now, I don't have to wait till it expires. And by the way, they're always going to expire the same day or the next day. Like if you buy it at 6 o'clock, it'll expire at 4:15 the following day. But this is going to expire at 4:15 today. That's when the market closes. And I can go in, I can place this trade. By the way, I can get out when it gets to 1405 if I want to. 1403, 1410, whatever. I can get out wherever I want to, get in whenever I want to. So it's just like going in and buying and selling. So I'm saying I'm going to go in and buy the S&P at 1401.9. I'm going to sell it at whatever price I want to sell it at. That's no different than hopping on over here and trading on, futures and placing an order to, buy. I can place an order right here to buy this future contract. So it's no different. And it gives you just a huge advantage to be able to hop in and trade with limited risk, maximum leverage. And if you have realistic expectations based on the deviation levels, then you really are putting things in your favor. And that's the key. One of the biggest keys as a trader is you have to figure out how to get all the edges you can, because it is so easy to get stopped out in the mind games and the psychology games you play with yourself when it starts moving towards your stop. And you're like, should I move my stop more? And then you do, and then you win. And that's the worst thing that can happen, because then what happens is you move it next time and it starts moving against you, and you move it more and you move it more, and it kills you. Okay? So it allows you to be a very disciplined trader on your risk management. And now it's sort of funny, like it's so weird, but you actually have to go to profit management, which is what we all want to do, but most of us never get past the risk management side of trading. And so I could do that. Now, if I thought the S&P was going to go down, I could sell the 1448 down to 1360 box spread. And I could do it with a very low risk as well. So we can go over here, we can see, okay, what would happen if I wanted to sell the S&P? Well, I can go in here, and on this trade, I could do 5 of them for $115 risk. So I could go short the S&P. I could go long the S&P. Well, what if some big news announcement's coming out in 15 minutes? I could do both, all right? And if the market flies up or flies down and moves more than what it cost me to put that trade on, I can actually make money. So there's a lot of things you can do with them, but let's keep it simple. You can buy or sell the underlying market with less risk and with less money required, so you have better leverage. You can't get stopped out. I hope everybody has a great day, a safe day, and I will talk to you tomorrow right here. Stay tuned. We got another great show coming right up for you.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.